Horizontal lines are the simplest, easiest to understand drawn object within slope charts or on any chart, and they simply demark important areas of either support or resistance. I've got a handful of charts here to lay that out. Here, for example, is the long-term continuous contract of silver. And it's got three interesting lines here, horizontal lines. This one here was support back in the late 70s, early 80s, which, as time and again, provided important levels of support until it failed here. And that's a crucial thing because when a failure takes place, one, it means that you cannot rely on that area anymore to support it as it has in the past. And two, it probably has changed the role of that line from either support to resistance or vice versa. Here's another line here, which as of this recording has provided firm support, and until such time as that line is breached, it should be considered reliable support for the silver market. I'll change these to green to suggest support. And finally up here, this red one, this was the peak back during the Hunt Brothers mania attempt to corner the market back in right around 1980, early 1980. And this was placed up here as a marker, and interestingly enough, it took many decades, but back in May of 2011, as silver was soaring, it almost exactly tagged that for a double high, a double top, and descended afterward. Let's move on to some other examples. Here is Atlas Air Worldwide, AAWW, and this is a good example of this particular line changing roles. So it had been support, now that it's failed, should the stock rally, this would be considered very strong resistance and would be a very interesting short opportunity at those levels. Here's Beacon Roofing Supply. Now horizontals are very easy to draw. You just right click on the chart, go to drawing tools and choose horizontal line, and you just lay them down wherever you want. And there's no need that any portion of the chart should merely have one line on it. You can have as many lines as is appropriate. There's a whole septet of lines here based upon certain areas of support or resistance, based upon where price gaps took place. Zooming in here, for example, there's a big price gap, so that's an anchor point for that particular horizontal line. So little by little and range by range, this has been breaking down. And most salient to the present, as of this recording, 32.22 would be an important level of resistance to further price action, whereas a failure down here at 24.97 would be a strong sign of much weaker prices ahead. Here's Cheesecake Factory, CAKE, another example of a whole series of lines, sometimes anchored to price points, and this one, the crucial supporting line, which is the base of this enormous topping pattern analogous to the prior one. This is URI, United Rentals. We zoom in here and we see a pattern within a pattern. This is the major support here, long for being broken right now, and then within that large pattern, there's this smaller pattern here. So there's another horizontal defining the break point of that pattern. This is Vale, V-A-L-E, and in this case, a couple of parallel horizontals. By definition, if they're horizontal, they are parallel. This one anchored to this price gap right here, and then this one lower down, constituting the larger pattern as a whole. And the last example is the S&P Metals and Mining ETF, and we've got a whole series of horizontals here showing range by range how this instrument has been working its way lower, and as of this recording, it needs a definitive break of 24.62 to complete this very substantial pattern.